Today we are going to be learning how to raise a $100 account into a $10,000 account as much as possible. So if you one of the 99%, you are the one of what? Of 99% who have no much capital to invest in yourself and have a big capital and have a big what? And have a big account like 10K, like 10K, like 1K, or like 500 account. So what you have to do to pay much attention so you understand the process, how it's going to work, so you can master this scalping strategy, which will help you to raise your small account. So the strategy is going to be moving like this. Step number one. Our step what? Our step number one. Step one, we are going to first try to identify the trend of the market. We are going to be looking what? We are going to be looking the trend of the market. So how to identify the trend of the market? We are going to be finding by using what? A higher time frame. So higher time frame is going to be like H4 and the H1. We are going to have H1. We have what? We have the daily time frame. So all of these time frames, they are going to be what? They are going to be our trend time frame, or our trend direction time frame. So after putting that aside, so we know the time frame which we are going to be using to look what? To look the trend. So remember, if you want to be good in trading, you always have to make the trend to be your friend. You always to follow the market where it's going. This is what I mean. Which means, you know, the market, to make a trend, it always move, making high highs and doing what? And making the high lows. Are you getting? These are high highs and these are high what? High lows. Which means this market is what? Is trending upward. It is vice versa. When the market is trending down, is moving, making what? Is making the lower lows, lower highs. Lower what? Lower lows. These are the lower lows and these are what? Are lower highs. This is what we call that the market is moving downwards. This is what also we call what? A direction of the market. So after identifying the direction of the market, so we have to drop down on what? On the low time frame. So when we reach in a low time frame, and the low time frame, we're going to be using M30, minute 30, and then we are going to be using minute 15, or we can use M5. These are the low time frame, and the low time frame, they are going to be helping us what? To find the pattern, in the market, so that we can use this strategy. This strategy is moving with what? With the pattern which I'm going to be showing you. Are you getting the point? So we look the setup on the low time frame as what? As we have said, and minute 30, minute 15, and then we do what? And then we do what? We continue to enter the market by putting our pending orders or by using our market execution. So our example of today, we are going to use H4 as what? As our direction time frame. H4 is going to be our direction time frame. So let us go to the chart and then we do what? We find our direction. So if we can come here, like we can see that the market now, where we are right now, the market is making the lower lows and the lower what? And the lower highs, which means this is the direction. Before this happened, before this happened, the market has been making what? The higher highs and higher what? And higher lows, which means this was what? The direction the market is going up. And then now the market is going what? Is going down. This is the trend. This is only what we need in what? On higher time frame. So you can use this to find the direction like that. That is how you look it. Just you see the market is going up or is going down. How do you know that the market now it have reversed? The moment the market is making the higher high, making the higher low, make the higher high, and come breaks this the previous lower what? the previous lower low, but which means it will be, if it comes back again and it continue to make a new higher high, but which means this it will become what, a stop hunter, or it become a fake out. If this it have not happened, but which means now the what, the market it has changed the direction from the uptrend to the downtrend. That's how you can do what, you can identify. So after identifying that the market is making the lower low, lower highs, we are going down. The next step, what we have to do to draw our trend line, we have to connect these 2 points so that we can keep what, we keep our direction in track, so we don't do what, we don't forget that we are looking the sales only. So this is what, this is the trend line tool you can use, and then you connect what, you connect these points. You have to connect this high, this high low. This is high, this is the low high, and this is the low what, the low. Those are the one which you have to connect, and after connecting them, make sure don't draw your trend line at the what, at the body. Don't draw your trend line at the body. Make sure to draw your trend line at the what, draw your trend line at what, at the wick. Exactly at the wick is when you put your trend line. So we have seen that our direction, we are going down. So let us drop to low time frame as what, as we start looking for the pattern to implement this strategy. So we are going to use minute 5. Minute 5, M5 is going to be what, our time frame for entry point, for entry what, for the entry point, and what, and the setup looking. So we know we are going down. The rule number 1 is done. We have looked at the direction. So now we have to find the setup. Which setup are we going to be looking? We have to look at this, that if the market is coming down, comes up, comes down, and breaks this structure. For when the market, after breaking that structure, we have to wait the market come back to make what, a retest at this structure, and then we what, and we take the market down. We target a stop loss, it should be above, and then we do what, this is will be our target. This is the setup what we have to look only, and we don't look the what, the opposite, that the market is going down, that the market is making lower low, is making the lower low, yes, come and break, and then we wait the market to come back and what, and mitigate the order block which is here, or to what, to retest this structure to make what, to make it a double bottom or a double top, and then we ready the market back. If that happens when you are looking sales, don't do that. Even though, don't take that opportunity. Don't execute your entry with that pattern, which means you will be trading against what, against the trend. We always trade what, following the trend. That is the only pattern what we have to keep looking. So you go in minute 5, you see that the market is making the lower low, lower highs, lower low, lower highs. When it breaks this, the previous lower low, it will come here and do what, and make a retest to continue down. We do the same thing. We follow the H4 trend. We take the sell what, we stake the sell opportunity, and this, it works what, it works for all currencies, it works for all payers, it works for all any kind of asset, it works. That's why you have used what, we have used a GU as what, as our example pair for those who love to trade what, to trade the currencies. So let us go to look the what, let us go to look the some setups which has been coming here, happening in a low time frame. So let us start from here. You can see here that the market came making what, making the high here, made high low, made the high, made the high low. Are you getting the point? Came and failed to what, to break above, and it break down. When it breaks down, you can see here what we have to do here right now. We do what, we get our horizontal line, and then we put here after the market to break that structure. So Yes, it have break that structure. We shift our market to this order block. We have to find here and what an M5 order block after break of what of the structure. So let us see what happened. Did the market come back or it didn't come back? The market didn't come back to mitigate our what our order block. So you keep that in mind, and then you keep also tracking. So by which means that is there pending. What we have to do, we have to find another structure. So we waited, the market breaks. We can see here, we can see when the market came, made a low, made a high, made a low, made equal highs here. We wait until the market breaks this. If it breaks this, we find where the market will be coming back to make what? To make a to make a retest. So let us shift our here. Let us shift this zone here, and then we wait to see, did it get broken in minute 5? This is when get what? Get broken. Let us wait here and see. Let us wait here. You have to make sure that your zone is what is broken. For example, if you can see here clearly the market, how it breaks this zone, the way how it breaks what? It breaks here. This is not good. Where the market it breaks and to go far from your what? From your previous lower low, and it continue to go far. If it breaks and stops here, remember this is a low time frame, and it stays there. It can be what? It can be a fake out like in minute 15 or in minute 30, and then you find it have what? It have take you far, or maybe it have give you what? A fake setup. So we let us do like this, and we see after this zone get broken, what happened. You can see here very well that the market, this is when what the market the market broke our what? Our exact zone. This is when it broken. So we find the leg, this leg from up to down, where the force started to what? To come and break what? And break this structure and break this zone. So we can see that we had what? We had a drop, base, drop. Are you getting the point? So which means we have two what? We have two zones that where we are anticipating that the market will what? Will make a reverse. So what you have to do here, you draw you two horizontal line. One, you put it here because we have here a base, and then what? A drop, and then you do what? You have another second zone here above. You put it here. Are you getting the point? This is what? The last buying candle before we drop. And you can see here at this base, we also have what? The last buying candle before the market what? The market drop. You can see. So how do we enter when we see this? When we see this, you can see that the market, it have come here in minute 5, and then it entered inside, and then it started doing what? Start coming out. So how to take entry here? You take entry after seeing the momentum candles. Don't put you pending order here, because the market, it might do what? It might come and pass through and then hit you stop loss. So we need the confirmations. This what I'm showing you right now. These are what are the confirmations. After getting the setup and looking, and we put where to execute place. So these are the confirmation. Before you click buy or sell, these are the things what you have to see before you execute. First one, you have to wait a rejection candle, which we show you that the buyers have what? Have started exhausting, and then the sellers have come in. If you can see well around here, you can see the buyer entered, and then the what? They get rejected. After M5 closing, after seeing this rejection candle, you can wait another what? Another red candle, and then it happens. When it happens here, you can see that when the rejection happens here, after that rejection, you can see we had what? We had here a red candle followed. Then after that red candle close minute 5, you what? You executed, and then you scalped or almost discount. That is what you scalp. And the next step you can see around here also, the second phase, it comes, then one rejection. After that rejection happens, you can see we had what? We had a bearish engulfing here, and then you execute that, and then you target what? You target 2 to 1. So let's say that you didn't execute after seeing what? After seeing this rejection, you didn't execute. Are you getting the point? You said, I don't understand this. Even I'm looking what? I'm looking the engulfing candle. Are you getting point? Those what? Candlestick pattern. You can look the candlestick pattern if you don't know the rejection, how it means, or you scared about the price rejections on your targeting zone. What you have to do, you have to wait the candlestick pattern. Candlestick pattern, you see here, we have what? We have a bearish engulfing, and then this could be your what? Your execution after exactly 5 minutes close, and then your stop loss should be above of this what? Of your candle. Of your candle. I'm meaning this one. After this bearish engulfing, you enter, then your stop loss should be above here. Are you getting the point? Then we target 2 to 1. So let me use pending order here, and we see if we executed here, stop loss should be above here. We are using 0.00. We are using 0.1. Our stop loss should be there. Those are $5. Almost, let us put it $6, and then we calculate good. Stop loss $6, and then take profit. We're supposed to take 2. What? We have to lose 1, and then we take what? We take 2. If we are losing $6, by which means we have to make $12. You can see that exactly when you see here the market after that happening, and then came and entered inside. After entering inside, don't put you pending orders. Don't use pending order, because the market can come and stop hunt all of those who are trying to sell here, and then it continue going down. So you execute after what? After seeing the confirmations. You can see that after entering, the market moved very well. It didn't pull back until it goes down. So you call it what? You call that is setup number 1, and we are what? We have made it as successful. So let us see our setup number 2. You almost have to wait. You almost do have to what? You have to wait. That setup is done. So we wait when the market breaks the structure. You can see that here the structure was broken. Here the structure was what? Was broken. And then we have what? We have here our what? Our candle here. Our last sale, our last buying candle, what we call what? An order block. And you can see the market came back and tapped in and then get rejected. So after rejection, you can see we also had here what? A bearish engulfing. You can see here we had what? A bearish engulfing. When you executed, after that executing, you can see the market traded what? Continues to go down, which means it is what? It is, we are looking 1 to 2. This is our what? Our execution, and this is our stop loss above here. Those are $5, and then we take what? We take $2, $12. So you have always to keep what? To keep looking the same pattern, and you do the same thing as what? As on uptrend, or when it is looking for what? For the buy setups. So when you're looking at the buy setups, you have to do the same thing. You always have to do something simple so that you can do what? You can do what? You can become profitable. So as well, you can see that this zone here was broken, and here we have what? And here we have our last buying candle, and you can see that the market came very well, tapped in, and then we continued what? We continued down. And another thing, what you have to do after, when you wake up in the morning, just go to what? Just go fast and look the events and read the news. First, make the fundamental analysis before you doing what? Before you executing buy, or before you looking the setups. First, find the fundamental, and you see how the DXY is going to be what? Is going to be performing. So And if you feel that you want to become an account flipper, make sure to watch that video which I have linked on this card. That may be here, maybe down here. You can see the card which is popping up here. So just click on that and then you go and watch that video. So if you have got value from this video, make sure to hit that subscribe button, click the notification bell to be notified whenever we be releasing a new video like this. See you to the next episode. Peace.